Welcome back to my YouTube channel, Victory Reverse Mortgage. I'm Benny Victory. In a prior video that I did, I shared with you the data and the information that the Consumer Financial Protection Bureau had put out in their article. And the article is titled Data Spotlight: Older Homeowners Struggling to Make Their Mortgage Payments During the Pandemic. So it's very recent, it's very timely. In fact, the report is of April 2020, where the Census Bureau has tracked the number and characteristic of homeowners struggling to make their mortgage payments. As of July 2021, this is only since last year, an estimated 682,400 older adults, defined as adults age 65 and older, were behind on their mortgage payment. I shared some of these numbers with you in a previous video that I did, but I find this topic so disturbing to me, and I find the information so necessary to dive deeper into, that I've decided to do a series of videos on this topic and look at it from different topics, different points of view. Because to me, unless you're able to go in and look at this same problem and see how it could, God forbid, relate to you or someone that you know, then this just becomes a bunch of numbers that we're tossing around and it won't have any significance. What's really disturbing to me is that the same vocal group of people who, when one person who has a reverse mortgage goes into foreclosure and they want to show up at the bank with pitchforks and want to burn down the bank, haven't made a peep when 682,400 seniors are behind on their mortgage payments and down the path of potentially being in foreclosure. And I've done a series of videos that you can look at in my playlist with the association that some people make with regard to having a reverse mortgage and the possibility of foreclosure. And I've again pointed that out from several different possibilities where it's less likely to have the possibility of foreclosure with a reverse mortgage, simply because if you look at this data, if you look at this information, when we go over this topic, the first step into foreclosure is typically because of the fact that the senior or the individual is unable to make timely mortgage payments. And the most obvious benefit of having a reverse mortgage is simply the fact that you're not obligated to make a mandatory mortgage payment. And what I shared with you is that I wonder if the seniors that are in this situation, the 682,400 that are in this predicament where they have not been able to make their monthly payments, how many of them would have qualified for potentially getting a reverse mortgage and being in a better position? And why haven't they? Why wasn't someone stepping in and saying to them, look, there's a better option, or at least there's an alternative to you being in this position where you're not going to be able to make your monthly mortgage payment, and where that headed is going to be a really bad place. So I didn't want to make one big video to discuss this, so I decided to make it into subparts. In this video that I'm doing right now, I want to break down the numbers, because the numbers to me are really tragic. Because, you know, today is December 22nd. In 2 days we have Christmas Eve. And the idea that these people could be possibly facing foreclosure and having financial hardships is heartbreaking to me. And I feel that as someone who does reverse mortgages, and I'm proud to do it. I mean, people look at it like it's a plague when you say that I do reverse mortgages. They look at you in the same way that they look at insurance salespeople, with, like, you know, pity and feeling sorry for them. And, you know, I'm so blessed to do what I'm doing at this point in my life, because I see the impact and the significance to the lives of people that I'm able to change and help, and how much of a difference it makes. In one of the videos that I'll be doing in this part, and I make the comparison between where the people are right now to where they could be, the data that I'll share with you is that in the fiscal year of 2022, which is, we're at the end of it practically, the number of senior citizens that were able to take advantage and get a reverse mortgage is over 64,000. So these are 64,000 senior citizens who decided to opt in and have flexibility with their monthly mortgage payments and not make it mandatory, not make it required, but something that's beneficial for them and optional. And I have to wonder why 64,000 were able to see that if they crossed the bridge, which is the narrative I'll be using and the example I'll be using, if these people cross their bridge to go from their traditional mortgage to where a reverse mortgage is, and be on the other side where it's safe and comfortable and they have financial independence and they have financial dignity, why was it that these other seniors weren't able to make the same journey across this bridge? And I have my own theories and I'll share that with you. But it's important to kind of put a frame around the numbers that we're talking about, because these are not insignificant numbers. These are not numbers of people that we can disregard when given the population of seniors. They are the most vulnerable group of people that we have next to small children. And we can't disregard this. And that's why I'm so disappointed that I don't hear any of these people that usually walk around professing that they care about seniors and their senior well-beings and they hate the reverse mortgage. Where are these people now when these are people who have the traditional mortgage, the mortgage that these people walk around and saying, this is the mortgage to have, and you have to have this mortgage, and the reverse mortgage is bad. Where are these people, and where's the conversation now when these are people who have the traditional mortgage and are facing the situation that they're in? And I'll share the numbers with you because that's where the starting point has to be. And in the next video, I will expand on this idea. But for this video, I just want to share with you, and these are numbers that are put out by the Consumer Financial Protection Bureau. This isn't a reverse mortgage company putting it out. This isn't me putting my spin on it. This is a federal agency who's tasked with looking after the consumers, and they're a federal government agency. And this is as of July 2021, so it's very recent. 682,400 seniors age 65 plus. Now what's glaring here to me is that the reverse mortgage starts at age 62 and above. So these people that are in this category, and given what I shared with you before, which is there's over $10 trillion of housing wealth that is available to seniors, that is available to take advantage of. This is housing wealth appreciation that seniors have, and I have to wonder how many of these people in their situation could have qualified because they're old enough, they're 65 and above, that could have qualified for a reverse mortgage and they didn't. 236,000 seniors had no confidence that they would be able to make their next month's mortgage payment. We're not talking about a small group of number. 236,000 people are saying, we don't know how confident we are that we can pay next month's monthly mortgage payment. So in other words, they're holding on by their fingernails. And you know, a mortgage payment is running a marathon. It's not running a sprint. When I meet with some of these seniors that are 70, 75 years old, and they have like 10 years left, 15 years left, it just is like, I can't get my head around it. Do you seriously contemplate making a mortgage payment when you're 85, 90 years old? And if you have the option, if you have the possibility to make it so that you don't have to, this is not something that you're required to do, why in God's good name would you want to? That's the part that frustrates me. That's the part that I don't understand, because you have significant amount of housing appreciation wealth, you're old enough, you're on a limited budget, you have limited investments. Why do you keep on making this monthly payment? Well, the consequences are that 236,000 seniors have no confidence that they can make their next month's payment. About 83,000 seniors of the 682,400, this starting number, will likely face foreclosure. And this is the inevitable part of not making your monthly payment. When you don't make it long enough, 3 months, 6 months, at some point, then the bank goes through the process of foreclosure. Because in the next video that I'll do, I'll establish the relationship that at the start, when we get into a lender and borrower relationship and the house acting as the collateral, as the security for the lien for the bank, the first thing that you're obligated to do is make monthly payments on time, which are monthly mortgage payments. And the relationship that is established by the bank and the client with the house is like this triangle. And I'm going to get into this, but I want to talk about the number that 83,000 seniors will be facing foreclosure. And think about foreclosure for a senior, how devastating it is. I mean, it's devastating for anybody, but think about how much more devastating it is for a senior, health issues, older, if their spouses died and they're by themselves. A lot of older seniors, when they're by themselves, they've never been by themselves. They've been married 30, 40, 50 years. Husbands usually pass away first. And the wife is by herself, and she's never had to deal with these kind of legal, financial issues, and the consequences of it are just tragic. And that's 83,000. 225,192 seniors report difficulty covering their regular payments. And their regular payments are their other non-mortgage related payments. This could be credit cards, DWP, all the other stuff that's not necessarily mortgage related. And that's 225,192 based on the percentages that was shared in the report. And again, I invite you to go look at this report, and I'll see if I could add a link to it so you could see it in the video. 136,480 often or sometimes don't have enough food to eat during the week. And this is, I mean, it's all bad. All the numbers are awful. All the numbers are heartbreaking. All the numbers are bad. But when you talk about 136,480 seniors being in a position where they financially can't afford to eat, and they have to make a decision between making a payment and having enough food to eat, that's the part that I struggle with. That's the part that, you know, gives me the motivation, the energy to make the challenge to myself where I'm going to do one video a day for the month of December so that I could have a massive amount of video library for people to look at and to share with consumers and to share with seniors and to share with advisors. You know, it's when I read numbers like this that I get over my personal feeling of how people are resentful towards what I do and justify that if I can help one senior. If you look at this number, if you look at the 682,400 seniors that are delinquent and on this path to going to foreclosure, if you take even 30%, 40%, which is not a significant amount of number, but it's not insignificant given to how many people we have, and they could have gotten reverse mortgages and removed their monthly mortgage payment and not be in this path where they're going right now, which is towards foreclosure and financial difficulty. And these numbers have their own consequences and their impact, which is over here. When these people have ended up in this section and are here, well, the consequences and the impact is that all of their savings and investments are gone making mortgage payments, but they still have a mortgage balance. In other words, they wouldn't have been in this category if they still had more money. But they ran out of money because there's no more money left. That's why they can't make their payment. So as a direct result of having a mortgage payment and a loan balance that's still outstanding, but having no more money left, it's this black hole that they keep pumping money into. They have no more money and their investments are gone, but yet they still have a mortgage. What else is the consequence of being on this situation by having a regular mortgage, a traditional mortgage, and now you are where you are? Where your credit is ruined, because as soon as you go late with a mortgage payment and that becomes 4 months of late, your credit is ruined. And when you're in foreclosure, forget about it. Your credit is ruined. And when these people need to get out of here and they sell their home, for example, and they want to move into an apartment. Now, forget about the whole conversation about being 80 years old and trying to move out of a house that you've been in for 30 years and you're trying to get a new lease and get into a new payment. Forget about all of that. But the fact that your credit is ruined and when you try to apply for something, you have no credit, that's going to have its own consequences and that's going to have its own limitations and that's going to have its impact. Why? Because you decided that a traditional mortgage with making monthly mortgage payments for the next 15 years of your life when you're 75 years old is the better choice than having a reverse mortgage. The foreclosure costs, the penalties, the sale of the home, and the realtor fees. These loans, when they're going through and enough time has gone by and the delinquency turns into a foreclosure like it is for 83,000 seniors, these seniors, when they go into foreclosure, there's going to be excessive amounts of fees for collection of not only their delinquent payments, but now the property is going to have to be foreclosed on. The senior is going to have to be removed. There's legal costs. There's expenses. All of these things are going to ratchet up, and it's going to be more expensive. And then the question becomes, all these fees are going to eat into your equity. They're going to take away from your profit. So if you're delinquent and you owe $200,000 by the time you're done, and if you have another $30,000, $40,000 of fees and realtor commissions and everything else for the bank, instead of getting more money, now you have less money. But the alternative would have been, instead of having a traditional mortgage, you could have had a reverse mortgage, no monthly payment. You had guaranteed housing security for as long as you and your spouse are living in the house. And all you had to do is pay your property taxes and your homeowner's insurance and maintain the property. Well, isn't that simpler? Isn't that less expensive to do when you don't have to make a monthly mortgage payment? Absolutely. Okay, but the consequences of being on this side is now that you go into foreclosure and you go into a situation and you have to sell the property. Now you sell the property, and after they back out their fees and the bank gives you your money, whatever it is, $100,000, $200,000. So now you have this money coming in, which is great, but you lost your home, and now you got to figure out some sort of a game plan for the rest of your life on how to stretch that money to pay for all of your housing needs. And there's the issue of, are you going to be able to qualify for governmental needs-based financing or needs-based income programs where you suddenly have $200,000, $300,000 in your bank, which is another concern. Okay, when you have reached this stage where your credit is ruined, there is no more conversation around somebody coming in and saying, let me help you with a loan approval, or let's refinance your existing loan. And you may even be at the mercy of trying to get a reverse mortgage that you may not qualify for, because at that point, if your credit is ruined and you're far enough down the road, there may not be enough time to be able to refinance you to get into a reverse mortgage. Because obviously, if somebody waited to they get into this position, a reverse mortgage wasn't even a contemplation, wasn't even a consideration in their mind, which is part of another video that I'm going to be doing about why wasn't it. For this video, to kind of set the frame, I wanted to share the numbers more so than I did in the previous and the first video that I did, because unless you get into the deeper numbers and you talk about where this is, this should be an alarm bell. If you're a senior watching this video, yes, there is the element of, for the grace of God, there go I, and I'm not part of this category of these numbers, and you're saying that to yourself, because here it is 2 days from Christmas, and we're talking about 83,000 seniors of the 682,000 will likely face foreclosure. I don't wish it upon one person. But let me ask you this. If you're a senior and you don't look at these numbers and alarm bells don't ring in your head because you're thinking, okay, well, these people mismanaged their money, or they didn't know what they were doing, and I'm not going to be in this kind of a situation, you really have to contemplate and say, are you correct in that thinking? Unless you're able to write a check and pay off your entire mortgage balance and still have money to last you and your wife for the rest of your life during your retirement, I don't know how far and how secure you could feel and think that I'm not going to be part of this category. In other words, what I'm saying is, if you have a $200,000 mortgage, how much money will you need to have in your bank to feel confident and secure? If you say to me, well, $200,000, I think you're underestimating. Because $200,000 is your mortgage payoff as if writing it off tomorrow. But if you have another 5 to 10 years of mortgage payments, the outstanding total interest that you owe is going to be more. And then there's also, you have to figure, am I in a health and in a good position where I'm not going to need to use some of this money that I have in my savings account to help me with my long-term care costs if I need it? If I need in-home care, am I going to be okay? In other words, there's a lot of other things, and in the videos that I talk about, I say that where you are in this stage of your life, in the third quarter, the fourth quarter of your life, you need to be planning your moves like you're playing chess. You need to plan out your next 3 moves, and you need to anticipate for your retirement throwing you curveballs for the next 6 moves. Whether that's losing your spouse and half your income goes away, whether you get some sort of an illness and you need long-term care, whether it's in-house or out of the house, whether there's going to be some sort of a major expense that you don't anticipate that suddenly comes in and you're going to have to deal with. You know, we all assume that everything's going to be hunky-dory, but the fact is that when the reality of life comes to us and it comes as a surprise and we're on a fixed income, then we're going to have flexibility. And I keep going back to this word that I count on in retirement, which is flexibility. Because with a traditional mortgage, there is no flexibility. There is no ability of the senior sending a check to the bank that says, I owe you $3,500 this month, and I'm going to just send you $1,700 to cover my interest only. I owe you $2,000 a month. I'm going to send you $1,000 because this month I'm short. You do that, you're damaging your credit, and you're on your way to delinquent payments, and you're going to be one of these people of $682,400. But that's not the conversation you have with a reverse mortgage. Reverse mortgage, there is no bank sitting there saying, hey, Mr. Smith, your mortgage payment is late. We're going to assess $200 of late fees for you. When are we accepting your payment? Are you going to be able to pay us something? Should we make some sort of arrangements? There is none of that. You don't have to make a monthly payment, and if you choose to do so, that's perfectly fine. I wanted to put out these numbers and go into a little bit more detail because, you know, just reading this report by the Consumer Financial Protection Bureau and reading over some of these highlights and sharing that information is not enough. And I will finish this video with what I started. Where are the people who show up to the bank with pitchforks and want to burn down the bank when one person who has a reverse mortgage goes into foreclosure? And they don't go into foreclosure because of not having paid mortgage payments. They go into foreclosure because they didn't pay property taxes. Okay, where are those people when 682,400 seniors with a traditional mortgage are headed towards going into a situation where 136,480 of them often or sometimes don't have enough food to eat and have to make a monthly payment option or go without food? So I hope you watch this 2 or 3 part video that I'm going to do. The next part that I'm going to do on the video that's going to follow is going to go into the relationship between the lender and the consumer. And this also will collaterally talk about the senior's fear of not being on title and being off title, because I think in the ultimate video that I'm going to do in the 3-part series is answering the question of why didn't these people, why didn't their children, why didn't their advisors, why in God's good name didn't somebody say, look, you've got options and you need to get into a reverse mortgage? And I'll tell you my personal opinion. I'll tell you what that is. And I'll share with you if that's where your thinking is. If you're terrified of making the same decision, then you know this is your alarm bell. All right, I'm going to get started on the next video. I'll say goodbye to you on this one, and I'll see you on the next video, which will happen in the next 2 or 3 minutes. God bless you and see you soon.